Hello there, financial enthusiasts. Welcome to our channel where we share the best advice on making smart financial moves. Today we're going to delve into a topic that's on the minds of many savvy investors: dividend stocks. Now you may be wondering, what exactly are dividend stocks? They are shares in a company that pays out a portion of its earnings to shareholders. That's you on a regular basis. It's like getting a bonus just for owning the stock. Pretty neat, huh? These stocks are a smart investment decision because they offer a steady stream of income, even when the market is down. You're essentially earning money while you sleep. And who doesn't love that idea? Today, we'll be diving into the 4 best dividend stocks to buy and hold forever, so sit tight. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. The first dividend stock we'll be discussing is, have you ever thought about the companies that power our everyday lives? The ones responsible for lighting up our homes, warming our food, and even charging our devices? These are the utility companies, and one of the most notable among them is NextEra Energy. NextEra Energy, based in sunny Florida, is the world's largest producer of wind and solar energy. With a market capitalization of over $100 billion, they're a titan in the industry. But it's not just their size that makes them impressive. It's their commitment to renewable energy, their solid financials, and their attractive dividend yield. Let's talk about their performance. Over the past 5 years, NextEra Energy's stock price has more than doubled. That's an impressive return, especially for a utility company. And it's not just a fluke. The company's commitment to renewable energy sources like wind and solar has set them up for long-term success. As more and more countries and companies commit to reducing their carbon footprint, NextEra is perfectly positioned to benefit. But what about their dividends? After all, that's why we're here, right? NextEra Energy has a current dividend yield of around 2.7%. Now that might not sound like a lot, but remember, we're talking about a stable, reliable utility company here. And NextEra isn't just reliable. They're growing. They've increased their dividend payout every year for the last 25 years. That's a track record that few companies can match. So why should you consider NextEra Energy as a long-term investment? First, their commitment to renewable energy is not just good for the planet, it's good for business. As demand for clean energy grows, NextEra stands to benefit. Second, their financials are solid. They have a strong balance sheet, steady cash flows, and a history of profitable growth. And finally, their attractive dividend yield and history of dividend growth make them a great choice for income-focused investors. There's one more thing to consider. Even though NextEra's stock price has more than doubled over the past 5 years, it's not too late to get in. The company's growth prospects remain strong, and its dividend yield is still attractive. In other words, there's still plenty of room for this energy giant to run. That was quite a bit of information to digest, wasn't it? But don't worry, we have 3 more stocks to go through. Moving on to our second dividend stock, we dive into the realm of technology with a company that has proven itself to be a stalwart in the industry. This company, ladies and gentlemen, is none other than the tech giant Microsoft. Microsoft has been around for over 4 decades. Founded in the mid-70s by Bill Gates and Paul Allen, this company has grown from a small startup into one of the world's most valuable corporations. It's a story of vision, innovation, and resilience. Through the years, Microsoft has been at the forefront of the tech industry, shaping and reshaping the way we interact with technology. Let's delve into the financials now. A look at Microsoft's financial performance over the past decade paints a picture of consistent growth and strength. The company has a robust revenue stream with a diverse portfolio that spans across software, hardware, and cloud services. This diversification helps Microsoft maintain steady growth and mitigate risks associated with any single market segment. But what makes Microsoft a solid choice for a dividend stock? Well, there are a few reasons. First, Microsoft has a history of paying dividends consistently since the early 2000s. This shows the company's commitment to returning value to shareholders. The company has also been increasing its dividend payouts year after year. In 2023, for example, Microsoft increased its dividend by 10% compared to the previous year. This trend of consistent and increasing dividends is a good sign for investors looking for regular income. Secondly, Microsoft's strong financial health allows it to sustain these dividends. With a low debt-to-equity ratio and a high interest coverage ratio, Microsoft is well positioned to weather economic downturns without compromising its dividends. This financial stability is crucial for long-term investors as it reduces the risk of dividend cuts during tough times. Finally, Microsoft's future growth potential is another reason to consider it as a dividend stock. With its continuous investment in innovation and expansion into high-growth areas like cloud computing and artificial intelligence, Microsoft is poised to continue its growth trajectory. This growth will not only boost the company's profits but also provide more room for dividend increases in the future. In conclusion, Microsoft's solid financial performance, consistent and increasing dividends, strong financial health, and future growth potential make it a compelling choice for a dividend stock. It's a stock that can provide regular income today and has the potential for capital appreciation in the future. 2 down, 2 more to go. Hang in there, folks. Our third dividend stock is none other than the tech giant Microsoft. Yes, you heard it right. Microsoft, the company that needs no introduction. It's been around for decades, a stalwart in the tech industry that has consistently delivered value to its shareholders. Microsoft's performance history is a testament to its endurance and adaptability. Since its inception, the company has navigated through numerous market cycles, technological evolutions, and competitive landscapes. Yet it has consistently managed to stay at the forefront of innovation and growth. It's been a journey marked by steady revenue growth, robust profit margins, and a track record of delivering value. Now let's talk numbers. Microsoft's dividend yield, although not the highest, is still impressive. At around 1.5%, it might seem modest compared to some other dividend stocks. But remember, we're talking about a tech giant here, a sector not particularly known for high dividend yields. The beauty of Microsoft's dividends lies in their reliability and growth. The company has increased its dividends for nearly 2 decades, demonstrating a strong commitment to returning capital to shareholders. But what makes Microsoft a good long-term investment? There are several reasons. First, Microsoft's diverse product portfolio, spanning across cloud computing, productivity software, and even gaming, provides a solid foundation for continuous revenue streams. Second, its robust financial health, marked by strong cash flows and a low debt-to-equity ratio, ensures its ability to weather economic downturns. Finally, its commitment to innovation and growth ensures its relevance in the rapidly evolving tech landscape. One cannot ignore Microsoft's continuous investments in growth areas, such as artificial intelligence and cloud computing. These investments not only secure its current market position, but also pave the way for future growth. This forward-thinking approach, coupled with its strong financial performance, makes Microsoft a compelling long-term investment. In an investment world that's increasingly volatile, Microsoft stands out as a beacon of stability. It's a company that has proven its ability to generate consistent returns, grow its dividends, and adapt to changing market dynamics. It's a stock that you can buy and hold forever, confident in its ability to deliver value over the long haul. So, there you have it. Microsoft, a tech titan, a reliable dividend payer, and a solid long-term investment. It's a dividend stock that's well worth considering for your portfolio. We're almost done. Just one more dividend stock to discuss. Last but not least, our fourth dividend stock is a company that's been a steady performer for years, demonstrating a consistency that is truly impressive. This company is none other than the global conglomerate Johnson & Johnson. Johnson & Johnson, a multinational corporation, has established a strong foothold in the healthcare sector, boasting a diverse portfolio of products ranging from baby care items to medical devices, pharmaceutical products, and more. This company has been in the business for over 130 years, standing as a testament to its resilience and adaptability in an ever-changing market. Now let's delve into the financial performance of Johnson & Johnson. Over the past decade, the company has displayed solid growth, consistently increasing its revenue and earnings. In fact, it has managed to grow its earnings per share at an average rate of around 6% per year. This kind of steady growth is what we like to see in a dividend stock, as it indicates a company that is not just profitable, but steadily growing its profits. But what about the dividends? Well, Johnson & Johnson has a stellar track record in this department as well. The company has not only paid but also increased its dividend for a whopping 58 consecutive years. That's right, 58 years. This achievement firmly places Johnson & Johnson in the elite group of dividend kings, companies that have increased their dividends for at least 5 decades. Moreover, the company's current dividend yield stands at a respectable 2.6%, which, while not the highest, is still quite solid, especially considering the company's consistent growth and stability. But why, you may ask, is Johnson & Johnson a solid choice for a dividend stock? Well, the answer lies in its consistent financial performance, its robust dividend history, and its strong position in a recession-resistant industry. After all, healthcare is a sector that remains essential, regardless of the economic climate. Moreover, Johnson & Johnson's diverse portfolio of products allows it to weather various market conditions, further enhancing its stability. Its commitment to innovation, evident in its substantial annual investments in research and development, ensures that the company remains at the forefront of its industry, ready to capitalize on future growth opportunities. So, there you have it. Johnson & Johnson, a company with a proven track record of stability, growth, and consistent dividend payouts, making it an excellent choice for those looking to buy and hold a dividend stock forever. And there we have it, the 4 best dividend stocks to buy and hold forever. Phew, we've covered a lot of ground today, haven't we? We've journeyed through the vast landscape of dividend stocks, handpicking 4 stellar options that promise to make your investment journey a fruitful one. Let's jog our memory a bit, shall we? Our first stop was at a robust company with a strong history of dividend payments. Its consistent growth and stable management make it an ideal choice for long-term investors looking for reliable returns. Then, we moved on to a company that has dominated its sector for years, piquing the interest of growth-focused investors with its impressive track record of increasing dividend payouts. Our third destination was a unique company that, despite operating in a volatile market, has managed to maintain a steady stream of dividends. Its resilience and strategic operations make it a standout choice. Finally, we wrapped up with an industry leader that has built a reputation for its commitment to returning capital to shareholders through dividends. Remember, these dividend stocks are not just about the immediate cash returns, they're about securing your financial future. They're about the peace of mind that comes from knowing you have a steady stream of income, regardless of market conditions. They're about the power to make your money work for you. Investing in dividend stocks is like planting a tree. You water it, nurture it, and over time it grows and bears fruit. The fruit in this case is the dividends, a sweet reward for your patience and trust. So there you have it, your guide to the 4 best dividend stocks to buy and hold forever. But remember, investing is a journey, not a sprint. It's about making informed decisions and being patient. If you found this video helpful, do us a favor and hit that subscribe button. Don't forget to like and share with your friends. Until next time, keep those finances in check.